off. The gas distribution companies which sold off pretty sharply. MGL and IGL, the two listed ones, will come up on your screen. I mean, the big ones, massive selling. I mean, 15% cuts is what we saw in some of these names. And this was on the back of some sort of emerging regulatory risk. So there was, of course, comments from the oil minister from the 4th of this month, which were being quoted, which were being cited, saying that, well, maybe companies are making too much money and then, they're not passing on the full benefits to consumers, and we'll ensure that they do. But then there was also comments from Mr. Gajendra Singh. He's, of course, member of the Petroleum and Natural Gas Regulatory Board, that's PNGRB, the regulator for the sector. And, he was also kind of on record saying that PNGRB has now started working on collecting data for CGD companies, distribution charges, to examine the prices charged by them. So some nervousness around that. We have actually Mr. Gajendra Singh with us to talk to us about what this is all about. Mr. Singh, it's a pleasure having you with us here. Good morning. Thanks very much. Prashant this side.
Hi, can you tell us
Thank you very much, sir, for taking our call early in the morning. Can you tell us what this is all about? What is the context? Because we heard from the oil minister, and then, of course, we heard from you as well. This is a sector where all of this was given out via competitive bidding. So are we now talking about some sort of regulation coming through?
No, if you see that the entities who are involved in building a CGD network all across country, now we have covered all across country, they are putting a best effort for putting a distribution network to all the consumers and to all the demand center. So they are doing excellent job. We don't have any issue on that part. Only the entities who have, like IGL and MGL, they are the pioneer. And if you see IGL and MGL, they are basically the entities who have attracted, and by seeing them, people have put a lot of capex in the different CGD sectors. What we are saying in IGL and MGL, their penetration level needs to increase. Like if you see in Delhi, the penetration level for PNG is 35%. We want that should go up to at least 50-60% in the possible all houses, so that kind of comfort the PNG provides, that should be given to all the consumers. Secondly, what Honorable Minister said, so it's not something negative against these companies. They are doing an excellent job. Only
Mr.
what
Singh,
we are saying, yeah.
You said that they are making supernormal profits. What makes you think that they're making supernormal profits? They have distribution costs, etc. as well. So on what basis does one conclude that they are probably making supernormal profits?
Number one, I have not said this thing, they are making a huge profit. What we are saying, the profit, in particularly infrastructure companies and this kind of companies, normally what we are seeing in continuous basis, their PAT is 20% and above. What we are saying, they have to deploy more capex in building a distribution network in their area so that penetration level increase. And I think that was the intention of Honorable Minister also. It is not something they are doing wrong. Only thing we want that penetration, the PNG penetration should increase in cities and towns.
Singh, so just to clarify, you were saying normal PAT levels, that's a profit after tax margin of 20% is what you consider normal. That's right? In this,
I'm saying we have what we are seeing continuously, the CGD entities who are working from so many years. Now we are seeing that if the continuous basis their PAT is more than 20% or 20%, so it appears to be that they are not putting a capex in their areas. Okay. What we are seeing normally, what we all reasonable returns normally, what we say that it should be normally either 12% or 15%, because in infrastructure company they are keep on deploying the capex. So 15% we consider that is something the reasonable. Yeah.
Mr. Singh, when the bids were put out, right? They would have bid for these sectors for laying out for the distribution network, etc., based on some assumptions, etc. But now, if you're saying that normally in a way you're saying you're comfortable with these companies making 15% PAT margins, 12-15% PAT margins, and not 20%. Doesn't that kind of sort of throw things haywire?
No. Just let me what I mean that they have won. You rightly mentioned they have won this bid on competitive basis, but they have given the target. MWP targets are there, and they are far behind on PNG targets. Okay, because they're the target. One is for CNG station, which they are complying almost 100%, or they are going ahead. Even some entities are doing more than 100%. Okay, we are okay there because gas uses are increasing through CNG. They are connecting industrial and commercial customers because currently 58,000 industrial and commercial customers, CGD entities are connected. That is also good for increasing gas usage. Our concern was PNG target, what they have given, they are not as to our expectation.
How will lowering margins, Mr. Singh, how will lowering first of all, let me just clarify that point because we don't want any confusion. You're saying you're okay with 12-15% is acceptable, 20% is not. Am I correct in paraphrasing you that way?
You can say that way. Infrastructure company, if they are making a reasonable return, we normally say that it is 12% is something that is a good. Yeah.
Now, will you take measures to ensure that it gets to that level? It does come down to that level, PAT margin, and in what shape and form? Are you discussing measures within the ministry with the this seems like, of course, I mean, this is coming in from the the oil minister, of course, made comments, and then so is there a framework, some measures being taken to ensure that?
Maybe it is a coincidence that Honorable Minister in one of our programs, he did mention that. And the concern for is that penetration level of PNG needs to be increased because the APM gas is being supplied for that purpose. And that is up to 105%. Yeah.
Mr. Singh, just to clarify, we've seen price cuts both in Mumbai and in Delhi in the last 24 hours. Should we tie this in with the thought process that you just shared? Are the price cuts happening now? Because the thought process is that PAT margins need to be, somewhat capped at around 15%, should not go above 15%?
No. We are not saying that thing, and we are not going to intervene in their day-to-day activities and not to this. Only thing, our role is whether the consumers are protected, if they are getting APM gas, particularly for PNG, we are saying they are getting 105%. Whether those advantages are going to be translated into consumers or not. Secondly, in regulation, particularly, we want the orderly development all across country. We are not looking that in particular area where they are making a business, they will do the thing. In other areas, which perhaps may be not that much lucrative, they are not putting a capex there. So we want to the regulation. We are not going to that we are do something negative, and we are not seeing any negative against IGL, MGL, or any entity. We are only there should be orderly development all across the geographical area in their what they have been authorized to.
Mr. Singh, what I wanted to understand is what changed in last 1 year, because April 2023 is when we were talking about changing the gas pricing formula itself in order to ensure that these companies go ahead and make normal margins. 1 year past that, we are talking about them making margins higher than what was stated for them. So what changed for you to look at the margins of these companies? Because since that, there have been price cuts taken by IGL or MGL for matter, Gujarat Gas as well. And secondly, you spoke about MGL's exclusivity ending in 2021. And you put out that notice yesterday on the PNGRB's website. Why was that delay? What was the reason of putting that notice after the exclusivity already ended in 2021?
That is the notice. There are the two parts. You have the two parts. One is that why the prices has lowered. That could be the reason because there are spot prices. Because if you see for CNG, the prices what they have lowered is for CNG. If you see in CNG, government is assuring APM gas up to 68%. Remaining, they buy the RLNG and they add into their kitty to making 100% CNG. Now the thing is, if the spot prices has gone to $8 currently, so they may be getting a cheaper RLNG mixing in their APM for CNG purpose. So that could be the one reason I'm saying. For price, because the spot prices, which was earlier at $12, has now come down to $8. And they are using 40%. When I'm saying 68%, they are using almost 40% RLNG in their business. Okay? So that could be the one reason. And another part, notice what you are saying. It was not the, why I'm saying the exclusivity was given for, say, 25 years. Okay. Now, these companies who have completed their 25 years, either they have to come forward with the PNGRB that they need some extension of this thing, because if they are meeting a service obligation, we don't have any issue or extending their exclusivity. But they have to come to the PNGRB
So, Mr.
to
Singh, I'm asking you this question because MGL is a listed company. Since this was put up on PNGRB's website yesterday, the stock fell because the confusion was maybe their biggest geographical area is seeing an exclusivity, ending of their exclusivity. So, trying to understand, did you put it out to remind the players that yes, you can come up and take up this area, or was it just put it because you wanted to remind MGL that you can come for an extension because they're already working or operationalizing in that area already?
It's a both. It's a both. What you are saying, it's a both. Because if any entity, because right now it is only 3 entities what we have in our notice mentioned. But there are the number of entities who are going to complete their 25 years, maybe in a subsequent period. Okay, so now we want to have whosoever have completed, if they have the valid reason for exclusivity extension, and if they are complying with our service obligation, yes, we are here. That's what I'm saying. Development, regulator is here to facilitate them. Not
have you changed the APM allocation, Mr. Singh? Have you changed the APM allocation?
APM allocation, what we are seeing currently, if you see, that is the information, though it is a government do the allocation. Currently, in CGD entities, they are consuming 38 million gas. Okay. In 38 million gas, if you see 18 million is APM, which is going to PNG and CNG. And remaining is, let me just complete, 13 million they are going for INC, industrial and commercial customer. But because the CNG, they are getting only 68%, so 5 million RLNG. Per day, they are adding into their APM gas to supply a CNG.
Mr. Singh, I just have one question, sir, because the two things are not adding up. You told us on one hand that reasonable margins that seem to be acceptable to the board and the government are 12 to 15%. Companies are making over 20%. But at the same time, you're saying that you will not intervene in any day-to-day activity, so that these two don't add up. Will you be giving a directive to companies to comply and lower margins to 15%?
No. Let me tell you, we don't have any intention that for regulation, but we want an orderly development all across country. If there are the 38, if the penetration level is, as I mentioned, 35% or 40%, and people keep on ringing to the government and to us that they want the PNG, but it is not being given after 20 years. So we want that consumers who are coming to us, they should get,
Got that. Just one last question, Mr. Singh, just to kind of finish this conversation. So pricing freedom will stay and will stay linked to market forces? I mean, that's a yes?
Absolutely, yes.
Okay, got
Absolutely,
that.
Yes.
Mr. Singh, we'll leave it there. It's so kind of you to join us in the morning and answer all those questions very patiently, a barrage of questions from all of us here. Thank you very much, sir, for joining us. Thank you very much. It's Mr. Gajendra Singh, member of PNGRB, sort of taking us through what the government's thinking is. And I think, as he said, a bunch of things kind of happened together. The oil minister's comment, the notice put up on the website of PNGRB, and then, of course, the comments from Mr. Gajendra Singh. Then there was a price cut. So 4 or 5 things coming together in short order, leading to those price cuts. But, it's still... It's tricky in terms of how you'd interpret it, because the government does want, he's said, I mean, I confirmed it with him, they'd be more comfortable with 12-15% margins, not 20%, but they're also saying that prices will be determined by market forces, which is input, which is gas as the input, and what that is priced at. So, we'll see, and we'll get you more perspective on this. We'll take a quick commercial break here. Our first